So this is going to be an advanced video lesson. In this video, I will teach you how to build your watch list for the coming week. Now listen to my words carefully. I said watch list for the coming week. So let's assume that we are in the weekend, it's Saturday and Sunday, and we are scanning the stock market to create a watch list for the coming week. So that watch list is only applicable from Monday to Friday. So next weekend, we are going to build another watch list because the stock market changes in a week, the data changes, everything changes in a week. So every week we want to build a new watch list. Okay. This is extremely important. That watch list is applicable only from Monday to Friday. That watch list is the universe of stocks from which I will choose to buy from Monday to Friday. And I want you to get into the habit of uh, having a weekly routine. So you should know what you should be doing on a weekend. And I also want you to get into the habit of having a daily routine. So you should know what you should be doing on a daily basis from Monday to Friday. This video will clear out that for you. In this video, I will teach you a technique of building a watch list which will have a significant number of stocks. So implementing this technique is going to take a lot of effort on your part. So that's why I said this is an advanced video. Uh, One important point, the more strict the criteria, the more strict your filtering criteria, the smaller is going to be the list. So when we start on a weekend, we don't use a strict criteria. We use a broad general criteria so that we get good number of stocks which meet that broad criteria. And then we keep reducing that list as the week progresses. So it's a different approach to the stock market. Let's see. For that, we'll need MarketSmith. Okay, let's go to MarketSmith. Okay, so let's assume it is weekend. So it's Friday evening or Saturday morning, preferably Saturday morning, because you have to give MarketSmith time to update their database and things like that. I do it on Saturday evening. Okay. So by that time, all the data is updated, all the ratings and everything is updated. So let's first log in. Oh, it's already logged in. So I'll go to idea list. And you see there is build your screen here. See, build your screen. Click here, filter India stock. So it's asking me to log in. So I will log in here. I am a premium subscriber of MarketSmith. I'm not officially associated with them. So I'm just a regular customer. I use this platform to save a lot of time. Okay. So let's go to build your screen. I click on filter India stocks. Let me put I will put it here. Okay. So now let's go to filters. See, I have created a Mark Minervini filter here. Because if you read Mark Minervini's book, he gives you something called as trend template. It's a very important criteria. It shortlists those stocks for you which are already in a stage 2 uptrend. We only want to buy uptrending stocks. We are not interested in stocks that are downtrending or which are going sideways. We only want to buy uptrending stocks. Okay. So let me give you the filter. So the price trend should be more than or equal to 70, which means whatever stock that comes in this list, that stock is doing better than 70% of all the stocks in the Indian stock market on a 52-week performance basis. I don't select buyer demand, the institutional demand. I don't select the industry rank. I just want to keep this list very broad. I just want to go with stocks with a relative strength of 70 or more. So these are leading stocks. These are stocks in the top 30 percentile of the stock market in terms of 52-week performance. Then let's go to technical filters. I will remove all of this. These are liquidity filters. Okay, now this is very important. Price versus 52-week high minus 25%. So let's say this is the 52-week high. You come down 25% below that. So the current price should be within that band. So the current price should not be more than 25% below the 52-week high. So first we are looking at price strength, which gives us leading stocks. Then we are looking at those stocks which are near their 52-week high. The closer to the 52-week high, the better, so that we don't have overhead supply. And then price versus 52-week low. Assuming this is 52-week low, the price should be at least 25% above the 52-week low. So we are not bottom fishing. We are buying a stock which has already shot up 25% from its 52-week low. So this basic criteria, this indicates that the stock has started to show strength. Maybe it has started to form a base. Okay. And it is a leading stock in the stock market. Of course, 50-day versus 200-day. Okay. So the price should be above the 50-day. So the price should be above the blue line, 50-day simple moving average. The price should be above 200-day. The price should be above the red line, which is the 200-day simple moving average. Okay. So this ensures that we are in a strong stage two uptrending stock. Okay. So we are looking at stocks which are showing good, decent relative strength, which are already showing strength because they are near their 52-week high, plus they are above the moving averages, which indicates a stage two uptrend. This much criteria is enough. Now, this criteria, it's a very broad criteria, as you can see, because it could contain penny stocks, it could contain stocks with low volume, it could contain stocks with low rupee volume, it could contain stocks which are in poor industries, it could contain stocks which have low or no institutional demand. So it's a very broad filter that I have created, because as the week progresses, some of these ratings can change. So I want to observe these stocks during the week. Okay. And as far as fundamentals are concerned, I will remove these filters. We don't want to make this filter too restrictive, because see, if you are too strict with your filter, you know what happens. Even if one of the criteria is off by 1%, one point, then that stock never comes in your filter. So if the stock has 69 relative strength, it is not going to show up in this filter. So you have to keep the filter broad to have a large, bigger list. Okay. So this constitutes your weekly routine. So every week you will run this filter once, only once. Okay. So let us save this. We will dedicate this filter to Mark Minervini. Let us call this Mark Minervini. Okay. We will dedicate this filter to Mark Minervini because he was the one who described this filter in detail in his first book. He also talks about this filter in the second book. I think in the second book, he made this 30%. In the first book, this was 25%. But anyways, let's go with 25%. So I save this and I apply this filter. Now, we know that there are 5,000 stocks in the Indian stock market. Let us see how many stocks we get in this filter. Okay, so you have to give it some time because there are going to be a lot of stocks because our filter is very broad in this case. So see 544 right now. Okay, last week I checked, this number was 761. So here is a hint for you. Okay, if you use the same filter every week, just track the number of stocks that come in that filter. So last week it was 761. This week it is 544. This week means last Saturday I checked. Today is Thursday. So we are approaching weekend. I'm recording this video on 23rd of October, Thursday. So in 4-5 days, the number of stocks have gone from 761 to 544. What does that tell you about the market? It tells you that the overall market in general is weak. And that confirms the news reports that come in Economic Times daily. Economic Times is a business newspaper that comes in India. Daily, they are reporting that foreign institutional investors are pulling money out of the Indian stock market. So from January to September, the foreign institutional investors were pumping in 500 crore per day on average in the Indian stock market. That is why the market was going up. 500 crore means 500 multiplied by 10 to the power 7. Crore means 10 to the power 7. Crore means 10 million. Okay. So 500 crore was the amount of money in Indian currency that the foreign institutional investors were pumping in the Indian stock market on a daily basis. But you know what happened in October? Per day, the foreign institutions are withdrawing 6,100 crore rupees from the stock market. So it's a 12 times increase. So one is putting 500 crore daily and then withdrawing 12 times that amount on a daily basis. So it's a fundamental shift in the market. That is why you see a reduced, and this week the market has fallen by a great deal. So you can see just by looking at this number, you can gauge the strength of the overall stock market. You don't have to look at the index to understand how the market is doing. Just by looking at this number, you can have a very good idea of what's happening in the overall stock market. Okay, so 544 stocks. When I click here, it will give me stocks in the alphabetical order. Okay, now how do you build your watch list? That is the purpose of this video. Now I am not going to uh, scan 544 stocks daily. On the weekend, I have to look at 544 stocks. So let me open 10 stocks for you. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, let me open 10 stocks for you and let me show you what I am looking for in my initial scan. See, some of these stocks, maybe 200 out of these, have a red flag on them. What do I mean by red flag? Let's see, let me show you. So this is 20 microns. Okay, let me see whether this stock is showing red flag or anything that makes me reject the stock. Okay, let's look at this. Does this have a red flag? Give it some time because I'm recording. Yeah, see, this stock has a red flag. So if I click on this, see, it shows low liquidity. So there is a red flag here. So those stocks out of 544, wherever there is a red flag, just flat out reject the stock. That stock doesn't come on your watch list. Okay. So I think out of 544, you can easily reject around 100 to 150 stocks. That is my guess. Okay. I have not counted, but you can easily reject 150 to 200 stocks. So that leaves us with around 300, 350 stocks. Now, those stocks which are not in red flag, what do you look for in those stocks which do not have a red flag? Red flags are already out. Now, in that stock which does not have a red flag, I am looking for a stock that has started forming a base or a stock which has already completed a base. Okay. So let's look at this. So have a look at this. This stock, you see this green line here? Okay, green dotted line. The stock started forming a base from here. So this stock is in a base. Okay. So this stock will go on my watch list. You remember that formula blue, green, red. So the price should be above the 50-day. The 50-day should be above the 150-day, and the 150-day should be above the 200-day simple moving average. Then there should be minimum 10 candles in the base. There should be minimum 4 points in the base. You remember that? So ignore the 4 points. Just look at the moving averages. So blue, green, red, and there are more than 10 candles in the base. So this stock deserves to be on your watch list. Doesn't mean you buy on Monday. It simply deserves to be on your watch list. If this price falls below the blue line, then that stock is not on your watch list. You could keep the stock on your watch list because Monday, Tuesday, the stock might pierce that blue line and go above it. So, I mean, the more loose you want to keep the criteria, it depends on you. Okay, how strict you want to be. I am generally during my weekend routine, I keep the criteria loose. So, as long as I see blue, green, red, and as long as I see consolidation, I'm going to add this stock to my watch list. So, how do you add the stock to your watch list? So, there is a plus button here. You click here. Okay, no list exists. So, I will create a list. So, let's say I will put my name. I will create this list. Okay, this stock is added to your list. Okay, now this stock has gone in my list. So let's look at some more stocks. So this is a red flag, so reject. This is also a red flag, so reject. ABB, see, this is forming a base. So the highest point is here and it's forming a base, blue, green, red. The price has dropped below the blue line. So it is not a stage 2 stock purely, but this price could come up in 1 or 2 days. So I will keep this stock on my watch list. See, as long as the price remains below the blue line, I'm not interested in buying the stock. But if it goes above the blue line, then it respects my criteria. So I will put this in my watch list. I click on plus, click on the list, and I apply. The stock is added to your list. So like this, I have added two stocks to the list. Let's see what happens here. This is a red flag. This is a red flag. This is a red flag. This is also a red flag. Let me open some more stocks for you. Okay, so let's open some stocks. I want to show you stocks which I am rejecting, which are not red flags, but I am rejecting them because they are in an uptrend. So let's open this. Let's see what's the story here. A lot of stocks are going to be red flags because of low liquidity. Maybe promoter has pledged the shares and things like that. So see, this is forming a base. So this will go on my list. I click here, it will go on my list. Next, I'll click on wait. Airspace. Okay, let's see what the chart is doing. Okay, I'm just having a 1 second or a 2 second glance on the chart, and this is one time work. See, this is a stock in an uptrend. Okay, see, this is point 1, 1, 2. There are only two candles in the base, so it will take another 8 days for the stock to complete the base, and we don't have 8 days, we only have 5 days. So no matter what happens in the next 5 days, the base is not going to get completed. So why should I put this stock on my watch list? You understand what I'm saying? So this candle, see, this is the highest price achieved by the stock. After this, there are only two candles, two bars. So I need minimum 10 bars after point 1 for the stock to complete the base. It's a rule that I use. So after two candles, let's say Monday, Tuesday, Wednesday, Thursday, Friday, 2 plus 5 is 7. So I want to wait 3 more days. So this stock maybe I will look at next week, but not this week. So this is a stock in an uptrend. This will not go on my watch list. Again, this is also two candles. Now this stock, see, 1, 2, 3, 4, 5, 6, 7, 8. Now only two candles remaining for this stock to complete the base. So that can happen on Monday and Tuesday. So this stock will go on my watch list. See, when I started the video, I told you that this is going to be tough. You have to spend time to do this exercise on 544 stocks. Might take you 2 to 3 hours. If you are expert at this, you can do it in a couple of hours. It's not very tasking because a lot of stocks are red flags here. So you can quickly run through this list. Okay. So this stock will go on my list. I will click here. It will go on my list. Next, this is a red flag. This is a red flag. Again, a red flag. Again, red flag. See, a lot of stocks are showing red flags. See this one. 1, 2, 3, 4, 5, 6, 7, 8. Okay. So again, 2 days remaining for the stock to complete the base, right? So again, stock is forming a base. So like this, what you do is you complete all of this analysis and keep adding to your list till you reach here. Click on my list. You see you will see your name. Refresh this. So it's opening now. So after you have gone through 554 stocks, reject all the stocks which are red flags, and those stocks which are not red flags, only select those stocks which are either forming a base, in the process of forming a base, or who have already completed the base, which means 10 candles. When that happens, that stock will come on your watch list. So let's say out of 544, you reject 200 stocks which are red flags. Out of the remaining 344, you reject, let's say, 144 stocks because they are in an uptrend. They cannot complete the base in the next 5 days. So you have, let's say, 200 stocks left, which will go here. Okay. So click on Rohit. This is the list that we created. We added some 4 or 5 stocks there. So you click here, see, these are the stocks that we added. So if this number is, let's say, 150, 200, those are the stocks which represent the universe of stocks which you will scan on a daily basis from Monday to Friday for your purchase. You will not look beyond these 200 stocks for the coming week. So this is an approach that I use. Now, out of these 200, some will break down below the base, so the base will fail, so that they will get rejected. Some of these stocks will break out, okay, without forming the base, okay, without even completing the base, without even completing 10 candles. So those stocks are also rejected. So every day I want you to keep scanning this list from Monday to Friday. And every day I want you to keep reducing this list. Stocks which don't obey your criteria, okay, you remove that from your list. Okay. So this is the approach that you can follow on a weekly basis and a daily basis. Of course, I will make some more advanced video on this topic, but for now, I hope you understood the process that I'm using. I don't want this video to become too long. What I do with this list, I will make a separate video on that. Okay. Because I'm going to track it every day. So for now, the moral of the story is I am first filtering the entire stock market to come up with 500 to 800 stocks on a weekend. Then I just slice and dice that list and I create my own list. And that is the universe of stocks which I am going to trade in that particular week. And I repeat this whole exercise in the next weekend. Okay. So I hope this video has added value to your trading journey. Thank you so much for your time. Please like, comment, and share this video so that this kind of valuable content reaches those who genuinely want to become professional stock traders. Thank you so much for your time. If you have any questions, comments, please write to me by email, connect with me by via WhatsApp or phone call, whatever. But please don't get stuck on a concept. We are all learning here. Okay. I'm doing my best to teach you as much as I can so that your learning curve becomes faster. Okay. You don't waste too much time. Thank you so much. Take care.